If another person in investment markets talks about the great African future based on infrastructure spend, I might just scream. Infrastructure spend is one of those great unknowns. Governments talk about it. Successive governments in South Africa have spoken about it. Yet, do we see any evidence of real infrastructure spend? Gautrain, for example, in South Africa doesn't really count. We need real infrastructure to get real economic growth going in South Africa, and so do other African economies. So it's needed, and it might get done. But who's actually going to fund it all? Let us talk to Gareth Visser, who's an equity analyst at Avior. It feels like the never-ending promise. People promise it, government after government after government across the continent. Is anybody actually putting bricks and mortar into the ground?
Well, across the African continent, there is quite a bit of infrastructure building going in. In terms of who's driving it, it differs per region. So we've got a situation at the moment where in a place like East Africa, you have a large chunk of government infrastructure going in. And it's the reason why the economy has been more robust in some of your biggest sort of West African economies at the moment. It's the reason why we've also seen infrastructure or cement consumption grow at rates far higher than you've seen elsewhere in Africa. So it is happening, but once again, differs per region.
Okay, let's look at that East Africa region, because Aliko Dangote, wealthiest man in Africa, big cement business in West Africa, has moved his interests east as well. He's looking for new opportunities. PPC, South African cement manufacturer, other than a couple of boardroom tussles last year, has got a very firm idea of wanting to go onto the African continent. And of course, there are Indian cement players and Chinese cement players who see opportunity here. So from a raw materials perspective, there is appetite. Is anybody actually using the stuff and doing the building?
Well, there are quite a few parties. So, for instance, in Kenya, you probably have a situation where there's I would say a 50-50 split. It's difficult to tell, obviously, because the numbers are somewhat inaccurate and very opaque, but it's about a 50-50 split in terms of what you're seeing through government infrastructure. So in Kenya, for instance, you've got things like the standard gauge railway. They're building a port up in the northern part of Kenya, in Lamu. They're building the Lapsset corridor, which is going to be a corridor from Lamu and Mombasa port, which is going to go through Nairobi and into the inland parts of West Africa, so East Africa, essentially linking up the likes of Uganda and Rwanda, which don't have a port to the coast, and Ethiopia as well.
Who's funding all of this? Because governments, tend to have quite short arms and quite deep pockets when it comes to a lot of this sort of funding.
Well, in East Africa at the moment, Kenya, for instance, is funding part of the Lapsset corridor. There is some Chinese funding as well, and there is a certain private element to it as well. But at the moment, your sort of big infrastructure projects like that is mostly government funded. Kenya did recently issue a Eurobond, and some of that has been used to sort of fund these projects.
You talk about private sector investment. Is it Kenyan private money, or is it investment funds who are looking for some growth opportunities?
It's a combination of both. So you've got some Kenyan private money going into it. You've also got some funding, sort of private institutional funds or private equity funds going in and investing in these projects. Sort of Kenya aside, a place like West Africa, for instance, we've got a situation, you mentioned Aliko Dangote. Aliko Dangote, together with private equity fund or private equity players, are actually building gas infrastructure down the southern part of Nigeria to try and improve the infrastructure and getting gas to the appropriate port place to essentially drive electricity generation, as well as making Nigeria less reliant on importing crude or importing refined oil and refining it themselves inland.
Because Nigeria is interesting. I mean, here is a country and economy heavily dependent on oil exports. It's a net importer of the refined fuel.
Yes.
Its economy is very, very finely balanced right now. New government in place, well, a one-year-old government in place. They're coming under quite a lot of economic pressure to do something. Yet they've got to do something with less money than they had 12 months ago, courtesy of an oil price that has not cooperated.
Well, first of all, the new government has only been in place for less than a year. So the elections were, I believe, in March. So the new government's been in power since about May. So it's only a couple of months, really. And in Nigeria, what we've seen in terms of the government is there has been a big clean out. It's probably something that has been needed in Nigeria for a long, long time. It has created a lot of uncertainty, especially around the future or the direction of economic policy. However, the sort of noises that have been made and some of the private investors like Aliko Dangote, for instance, the guys are talking about this backward integration and driving it quite heavily. Now, backward integration occurred in Nigeria a couple of years back through the cement industry particularly. So previously they used to import 90% of their cement, which had a massive impact on their foreign exchange reserves. Now you've got a situation where the Nigerian cement market, for instance, is totally self-sufficient. There's close to 40 million tons of capacity in the market, and demand at the moment is in the 21. So you've got a situation to import anymore. and the Nigerian government is trying to push this policy as well, and other private guys are getting involved in terms of other elements of the economy. So crude oil is one that I mentioned. Instead of sending out the crude and bringing back the refine it in-house. Agriculture is another one that's been neglected for a long, long time. So a number of reforms have happened there, and it is slowly but surely starting to gain traction as well. But you're quite right, they are in a tricky situation in terms of financing, and they are trying to get out of this. A couple of things that they are doing is they're trying to reform the revenue collection services. So actually going out to these guys and collecting outstanding tax revenues. The other element as well is getting hold of money that was shifted offshore illegally and legally to a certain degree, and getting that back into Nigeria so it can be put back into the
It is. So it is about repatriating funds and using those funds for the good of the country.
Exactly.
South Africa, another case in point where lots of talk has happened over the last 5 years, also about infrastructure spend, but you just have to look at the share prices of the big construction companies on the JSE and realize that, one, there's not much work happening here. They post 2008 and post the Soccer World Cup went looked for work elsewhere, but have done it on the tiniest of margins, and as a result, profits have been pitiful, if any at all. What's the prospect in the South African market as far as South African construction companies are concerned?
Well, in terms of South African construction companies, it's a bit tricky. So the construction companies have moved away from being sort of pure construction companies, a lot of them shifting into engineering work, which is more annuity-based and slightly higher margin. On the cement side, however, which is sort of a direct link in terms of the actual building that's happening, in South Africa, you're not seeing massive government infrastructure projects. A lot of it is the small to mid-tier stuff. So schools, clinics, there's road networks going up. You ride around Sandton, there's still quite a bit of private investment. I mean, Sandton's a great case in point. I was there.
But Sandton is like this little island of, it's a hive of activity. The trouble is you go much beyond Sandton and not much else seems to be going on anywhere in the country.
Well, this is interesting. So if you go into parts of the northwest, Limpopo, Northern Cape to a certain degree, okay, Eastern Cape's a bit of an exception, but those sort of inland rural areas, if you will, what is driving cement consumption in South Africa at the moment and basically supporting the growth rates that we have is this urban-rural building that's happening. So
no, but is this private individuals who are going out and building? You go, for example, through rural Transkei and you see homesteads being converted from old-style traditional housing into bricks and mortar housing.
That's correct.
There's a lot of that sort of stuff, but that's individuals going out and buying 100 pockets of cement and going to do the work themselves. But
there's a massive backlog of this in South Africa at the moment, and we've seen a lot of people move into that, well, a large sort of chunk of the demand going into that market. I mean, Cashboard, you look at their results, you can see the sort of cement amounts that are going into these rural markets, and that's what's driving cement consumption in SA. You also have in SA, like I said, small to mid-tier sort of government infrastructure projects, also given a bit of a push, but it's not enough. So obviously what the cement market and probably the construction industry as well in SA needs is the NDP plan to come through, is that infrastructure bill to be signed in place, and to see these projects being signed out and laid out so that guys can tender for it, we can start building and getting that divide going. But you know, it's always a tricky one to make the call on that.
Completely. I mean, South Africa, we've got a potential big nuclear build coming on, but we don't know anything about it because the energy minister won't tell the state secret as to who, what, where, when, and how. You know, Mudupi and Kusile are approaching the midpoint of their construction cycle. We're going to need more of electricity infrastructure, certainly, whether it comes in the form of nuclear or in coal. There is money to be invested and spent there.
Yes.
Will the contracts go to local players, one wonders, based on what we know about how, let's say for argument's sake, the Russians decide that they're going to be the providers of our energy into the future?
Yeah, no, it will be tricky, but once again, those are sort of difficult calls to make, given, like you quite directly alluded to, was the sort of political element around that and how that plays out. And obviously what these contracts look like for these nuclear plants, for instance. Are there clauses that say if we provide the nuclear plants, we provide the staff and build it ourselves? So there's a lot of uncertainty around that in South Africa now, particularly around sort of government infrastructure, major government infrastructure spend.
What models have we got to look at in terms of other African countries and what others have done? I mean, you talk about the multiple investment happening in Kenya. Who's doing the construction in Kenya? Are those Kenyans doing the work, or are these multinational companies that are coming into those areas and doing the work there?
Well, in Kenya at the moment, a lot of it's Chinese contractors coming in, Chinese and Indian contractors as well. Obviously, Kenyan has a heritage of having a lot of Indians, or an Indian sort of big Indian population. So you've got all of those coming in. But what the Kenyan government has done to protect their domestic industry, so they know that they don't necessarily have the skills in place to do a lot of these projects. So you have to bring the skills in from elsewhere. So what the Kenyan government has done is they have said that a certain proportion of the inputs have to be local. It differs by type, so whether it's your capital or material imports. For instance, on the material side, 40% of it has to be locally sourced. So what the local contractors are doing, the local construction guys are doing, or the foreign constructors are coming in, they're bringing in local staff. They are training them up. I have spoken to a couple of guys on the ground that are building shopping malls out in Nairobi, and they've told the story of how they train the guys up. So the Chinese guys, contractors for instance, are coming in, bringing their skilled and semi-skilled guys, but trying to bring the Kenyan, the sort of local population through, and then obviously supporting the domestic industry through having 40% of the inputs domestically sourced. So cement's a good case in point. Where in Kenya, previously the Chinese contractors could come in, essentially bring cement with them and bypass the local cement market. Now the guys are buying cement from the local players, based on obviously what they can produce, because there is a bit of a discrepancy in terms of the different grades and what they can supply. Which
is good ultimately for companies like PPC, because PPC is expanding and it's got an African footprint, which it hopes to grow. What's happening in Modderfontein? Because Modderfontein, the piece of land that was sold by AECI probably 2 years ago now, £1 billion deal to Chinese investors, it was going to be the biggest city in Africa. Has anybody turned a sod there yet? Because that surely is a boon for the South African economy.
It surely will be. I haven't heard of any news or any sort of developments on that land. It's just been news flow at the moment and rumours going around. It will be interesting when it comes into play. Once again, there's also questions of who gets the contract for that. The suspicion obviously lingers that if it's a Chinese investor that's built it, they would potentially use Chinese contractors. And you are seeing a situation in the Chinese market now where, we've seen it through one of the EPC guys that builds a lot of cement plants, where they are under pressure given the fact there isn't that construction growth going in China. So the guys are looking further outside the country, or outside of their country, and Africa is one of those that stands out for the Chinese, given the fact that they've been here for the last 15, 20 years all over Africa, and the contacts are there.
Gareth Visser, thank you so much for joining us this evening on The Moneymakers. I'm Bruce Whitfield. Thank you so much for watching the show this evening. Gareth Visser giving us a perspective on the demand for cement across the African continent. It's been very good for Aliko Dangote. Now that PPC has got its boardroom tussles and battles out of the way, perhaps it will be able to focus on its knitting across this continent as well. And at the same time, the South African government, which for years has promised 800 billion rands worth of infrastructure spend, but doesn't seem to have applied much of that capital yet. It's high time they did. Certainly in the energy sector, there's going to be huge demand for infrastructure over the next couple of years. Thank you for watching The Moneymakers. There'll be more Moneymakers tomorrow. Till then, good night.